Welcome to the Inside Track on Real Estate. And I'm Ken Dekker, and today I've got...
Ryan Dekker.
Yeah, a little chip off the old block.
Yeah, most days.
And so, I'd like to do an update today on what the market's doing. That's still the most frequently asked question when you're out, at a party or a gathering or a church or anywhere. It's, how's the market doing?
And some of the things I hear quite often are, the housing market is crashing, at parties. And so today we're going to, debunk a few things and really let you know what's going on in the market.
So the sky's not falling?
Most days it's not falling.
Excellent. So actually, if we look at the Ottawa market on a whole, over like the last 60 years, it's kind of averaged around 5.5%, 5.6%. And there's only been 5 years where values actually went down on average during the entire year. This could be another one.
We could be in it, eh?
We could be. We're just really flush right now. Condominiums still remain very, very full of inventory, which is causing downward price pressure. Freeholds are running pretty close. They're up in inventory, but the values are holding strong.
So why do you think that there's so much inventory in condos right now?
I think it's a factor of overbuilding, and maybe a little reduction in the amount of people coming in. And typically, our condominium purchase price has been a more affordable purchase price. But what they've been doing is all the ones that are being built are much higher price. And so they're not really for the first-time buyer that's immigrating into Canada or coming to Ottawa. They're typically more, might be your kind of your last destination prior to, moving out of a home where you've got more maintenance on it and you want to move into that type of property. So the builders have been building a lot of apartment style condominiums. So that's what's been driving that inventory up partially. I think there was a lot of speculative buying as well. Investor buying, thinking they would flip them or rent them. And so that's putting downward pressure on rental prices and on the ability to flip those condos.
So when it comes to, that speculative buy, we've seen a lot of investors who decided, I can buy 2 or 3 of these. I'm getting them at a deal, and then I'll either sell them or rent them once they, they're built. And what we've seen is just too many people have done it.
Yeah, there was a big push on that, and speculative buy is not the kind of investment that I personally recommend to my clients. And we'll certainly go over that if you stop in or sign up for one of our investor classes. Our investor class starts on the second Thursday of every month, but you do need to call in to 613-860-4663 and register because we do have limited space in those wealth building workshops.
Absolutely.
So let's go back to the stats. Okay, some people really want to hear the stats. So in March of 2014, the Ottawa Real Estate Board sold 126 homes versus 1,126 homes versus 1,160 homes in 2013 during the month of March. So that's a decrease of 2.9%.
And is that condos or freehold?
That's combined.
That's both.
That's all properties. As a matter of fact, that would be farm properties, commercial properties, everything. That's everything combined. 2.9% decrease in the number of sales. Not huge, especially considering the March we had. Very cold, very snowy March. Last year, if you remember March, I think it was like plus 20. It was summer. We didn't have a spring last year. So condo sales, let's go there first. 230 sales compared to 238 sales. That's a decrease of 3.4%. Not very much.
Not huge.
Not huge, especially, again, the weather. Average sale price was $251,380, which was a decrease of 2.1%.
In price?
In price, yeah.
So if I bought the home for, let's say, $250,000, then I'd expect it to be 2% less than that this
year later.
Yeah.
Yeah, typically. Now, average prices Again, this is for the entire board. So pockets may have increased in price and other pockets may have decreased in price more. So you really need that realtor on your side looking at the stats when you're looking at buying so that you make sure you buy a good value.
Absolutely.
Okay. The interesting thing is inventory. Inventory continues to climb with condominiums. We had for sale at the end of March 1,850 condominium properties. Now that's compared to 1,500 only 1 year ago in March.
Wow.
Same month over month. So that's a 23.3% increase in 1 year in the amount of inventory. Now what I did was I looked 5 years back because I love to do the 5-year trend. And our inventory has been increasing every year for the last 5 years. So 5 years ago, there were 750 condominiums for sale. Yeah. So that's an increase of 146%.
In 5 years.
In 5 years in inventory. Now remember, sales are staying relatively flat over the last 5 years. We've had similar sales volume year over year for the last 5 years.
So we have the same demand, but an increased inventory.
2.5 times the amount of inventory.
5 years.
Yes.
Wow.
And that's like if you've got 2.5 times the amount of bread in the store, and the people are still only buying the same amount of bread. Guess what happens to prices of bread?
It should go down, or it goes moldy.
Exactly. Well, we don't want our houses going moldy.
No.
But some of them will be vacant, and there'll be more people that maybe are in a distressed state, or they're in a divorce state, or something like that, a financial state, where they need to sell, or it's an estate sale. So those people need to sell. So there's a lot of inventory, so they're going to be downward pricing pressure on those so that they can get them sold. Okay. Now, freehold. Freehold, it's like the tale of two cities. We got this tale of the city of the condos, and we got the city of freeholds. Freeholds, 496 sales compared to 900 last year. That's the only 0.4% difference. Virtually the same.
Nil. Yeah.
And interesting, prices almost exactly the same as well. 386,690 was the average sale price in March, which is still quite affordable with the interest rates where they are. Interest rates are still strong. That's what's holding our market. If interest rates climb 1% or 2%, look out, market. It's going to be a tough go. So we're talking 0.2% increase in value on average across the Ottawa Real Estate Board on freehold homes. So that's holding pretty steady year over year. So if you're pricing your home this spring, a lot of people go, oh, well, it's spring market, let's put our price, $10,000 or $20,000 more than the last one sold last year. Well, not in this market. It's what did they sell at last year, and that's, if you can get that, then you're doing well in this market.
Yeah.
And again, we adjust for micro markets in certain areas. And so with saying that about micro markets, let's look at that inventory first, and then we'll go to a couple of micro markets, because we did have someone ask me that question, so I want to answer it on air for him. So the first one is, let's talk about these freehold inventory. 5,200 homes for sale versus 4,850 last year, which is a 7.2% increase. And over 5 years ago, there was, March of 5 years ago, 3,125 homes for sale, with that makes a gross increase of 66.4%. So a little over 50% more houses for sale. So there's some good value still out there in freehold as well. Interesting, the average sale price was $386, but over 50% of our sales were around $350 or under. So there's still a large bulk of sales in that affordable area. Yeah. Now I had a client ask me about, well, what's Rockland doing in comparison to Orleans? And several months ago, there was a lot of doom and gloom about Orleans.
Lots of doom and gloom
with the and some of the
government layoffs.
Government layoffs, jobs going to the West End and to Barrhaven area, and the construction, adding the extra lane onto the Queensway, making it tougher to get to Orleans. And then they had this wonderful sinkhole a year or so ago. So Orleans has had its troubles. Interesting what the stats show, though. So let's go there. So in Rockland right now, And I only did freehold because
Yes.
this particular person was interested in freehold properties. So in Rockland, and this is Rockland and Clarence Creek area, 217 active properties with 5 conditionally sold.
Okay.
Okay, so last 12 months, through the Ottawa Real Estate Board, 326 properties were sold in that same area, with an average price of $265 and some change. Mm-hmm. Okay. Now the previous 12 months prior to that, so March of 2012 to March of 2013, 344 sales. So that's a decrease of 5% in the number of sales. And prices have also decreased. They went from 274 down to that 265. So that's a decrease of about 3.3%. Mm-hmm. Now, interesting, if you take the number of sales in the last 12 months, which was 326, and you take the number of active listings, so we take the 326, we divide it by 12, mm-hmm. gives us about 27 sales per month on average. Okay. And with our existing inventory right now at the end of March, 217 divided by that 27 and change gives us roughly 8 months of inventory. Now that puts it into a buyer's market. Not an extreme buyer's market, but a buyer's market. Balanced is kind of in that 4 to 6 months range. Mm-hmm. You get over 6 months inventory, you're running into a buyer's market. If you're getting over like 12 months inventory, then you're extreme buyer's market.
And so for those of us that aren't so, used to the terminology of buyer's market, seller's market, what does a buyer's market mean?
A buyer's market means there's lots of inventory to choose from, and typically they're not in as much of a rush because the number of days to market a house on average is longer. Mm-hmm. And they have a little more time to look and consider a house. And typically, there aren't many multiple offers on houses, so they are paying relatively little lower price, and it's putting that downward pressure on pricing.
So they might have more negotiating power?
Yes.
Okay.
Yeah, because there's fewer buyers, more sellers, the buyers have more power. Mm-hmm. When the reverse happens, when it's a seller's market, we have limited inventory and we have more buyers than we have inventory. And maybe inventory staying on the market for 30 days, 45 days. And so what happens is the buyers, when there's a good house, there's usually 2 or 3 buyers that want that good house. And so they'll bid on it like an auction, and you usually get the prices moving in an upward trend.
And a lot of Ottawa is a balanced market. And what does that look like?
A balanced market, typically you've got between 4 and 6 months of inventory. Mm-hmm. Your days on market is going to be probably about 50, 60 days.
Okay.
Typical average marketing time, 50, 60 days. And so you've got a good quantity of inventory and you've got a good quantity of buyers. Mm-hmm. And it's what we call kind of balance. Nobody's under any duress to sell typically, unless it's a duress property. But the market's not under duress to sell, and the buyers aren't under duress to find something and buy. So we call it balanced. It's a very calm market.
Awesome. Very stable.
Yeah. And, people will ask me, well, is it a good real estate market? Well, it's always a good real estate market. It depends on whether you're asking from a buyer's perspective and a seller's perspective and what area you're asking about. So we can go into all of that. So if you're just joining us, you're listening to the Inside Track on Real Estate with the Dekker Team. And I'm Ken Dekker, and I've got my son Ryan Dekker here, who's
Hello.
also a licensed realtor. And we're just having fun talking about the market.
Absolutely.
So we've got kind of that update on Rockland. Rockland's looking a little rocky.
Cheesy.
That was cheesy, yeah, but
perfect.
Okay.
And so what about Orleans? We talked a little bit that, we've heard lots of doom and gloom, but what is it really doing?
Well, that's what I was surprised at when I looked at the stats. 355 active properties with 33 conditional sales.
Wow.
So that means about 10%, a little under 10%
Are conditionally sold.
is conditionally sold.
So under contract.
under contract, doing their home inspection or their finance and that sort of thing. So that's a good pace. Now the other thing we look at again is 12 months inventory. So in the last 12 months, sales compared to the inventory. The last 12 months, 1,335 sales. So if we divide that by our 12 to find out how many per month, we get roughly 111 and change, 111.25, I believe. And then divide that into the number of active properties, the 355, that gets us 3.2 months of inventory. So Orleans is actually a very nice, balanced market right now, which I was surprised to see. And then, because of all the, the kind of blows they've taken in the last year around their transportation and that sort of thing. What else is really interesting is compared to the previous 12 months, so that would be March of 2012 to March of 2013, 396 sales in then. So that's just a decrease of 4.4% year over year in the number of sales. Not huge. But the nice thing was the average sale price was actually up. Okay, so the last 12 months, 369,000, and the previous 12 months prior to that, 360,834. So that's an increase of 2.3%. So they're actually bucking the overall Ottawa market average by 2%.
Yeah.
So in that, call it a micro market. I don't really like to call Orleans a micro market because it's a big market.
It's a big market.
But then you got to go into the little areas, and that would be your micro market. But it's bucking the trend. It's 2.3% increase and 3.2 months of inventory. So there's still good selection. It's not like you can't find a nice house in Orleans, because you can. And so that's kind of where that's at.
Awesome.
Big surprise.
Yeah.
Now, Ryan, we talked briefly about our investor workshops.
Yeah.
And we
Second Thursday of every month.
And we were recommending, we've sold some of our investors some properties in Barrhaven and Canada and Kemptville, and some in Orleans as well. Now, my assumption is, and I didn't get to the stats, so I'll have to do that maybe next time we do a market update, is the rental market will be improving as well in Orleans, because if the demand is strong, which it seems to be.
Because last year it was a little tight in Orleans.
Yeah.
For rental, meaning it was harder than the other areas.
Yes. I think we might find that also changed, because typically when the sales market is strong, the rental market is strong as well.
It can be the reverse. If you want to know why, come to the seminar.
Yeah, beautiful. Now we've got a lovely home for sale. This one is in Barrhaven.
Awesome.
Yeah.
And tell me about it.
Well, it's a 3-bedroom home, hardwood floors on the main level.
What about that ensuite? I always want an ensuite.
Oh, you want an ensuite? This one has a nice ensuite. Actually, beautiful. The master bedroom is huge. It's fairly big. And it's got a lovely walk-in closet, nice ensuite bathroom. The other 2 bedrooms are okay sized. And of course, you've got another full bathroom up there on the main level. Nicely decorated home. A finished basement, you got a rec room down there, a TV room kind of thing. So really nice. And this one's very affordable. It's a single family home, 2-car garage at $400,000.
Nice.
Yeah.
2-car garage, $400,000 ensuite, looking good.
Yeah. Got any buyers for that, Ryan?
We'll see. Hopefully. What's interesting is if you were to get a home that's much smaller and actually attached. So a row unit, middle unit, you're going to spend over $300,000. And so to go to a freehold 2-car garage, much larger, you're only moving up $100,000, which
even less.
Even less.
A lot of those townhouses,
they could be 320, 330,
320.
Yeah.
So and typically you're about $5 per thousand at the interest rates today. So if you're going up 50,000, that's going to be $250 a month increase in your mortgage costs. And this is going to have a larger lot too, because when you're in an attached home, you don't have any space between them, so you've got a fairly narrow lot. Many of them are 28, 32 feet wide. This has got a wider lot, which is really nice. Yeah. So, we've got a few extra minutes.
We do.
What do you think we should talk about?
Well, we've talked about the market, and we've explained that, we're in a balanced market, which is really cool. And what have we been for the last 40 years? Let's talk about the history of Ottawa.
Oh, well, it's changed a lot. I've only been in the industry for 20 years. So let me talk from 20 years. I started in 1994.
Okay.
And immediately when I got my license in January of 1994, the market started to go down.
So that's because you joined in?
I think maybe I joined at the right time or wrong time or whatever you want to say. I don't think I caused it.
Okay, that's positive.
I think it was government layoffs and dot-com bursts.
Okay. And what were interest rates back then?
They were running 6-7%.
Okay.
Not maybe 8. Not horrific. 7-8%. Not as low as they are now. And prices actually fell in Ottawa on average over the entire board for 3 years in a row, 94, 95, 96. So I had a great time selling because I'd say, do you want to buy one? It's going to be worth less than when you paid for it. They're a really good deal. You want one? And so, but we were still selling homes. It was tougher though. Sometimes it would take a year and a half to sell a home, and you had to price it well. And what we call lead the market, because if the market's going down, then you want to price your property below where the last one sold. Because if you don't, what happens is you start chasing the market down. Now, it didn't decrease a lot. Over those 3 years, probably about 5% in total it went down. So, 2% one year, 1% another, just very little decreases. But interesting enough, when it started to come back, it came back with a vengeance. And within a year, we were back to prices that were previously, 3 years earlier, we were past those. And we started seeing 10%, 12%, increases. 16% increases in 1 year. And that's a tough market, actually, to price a home, because you really don't know what it's going to sell for. Because, one sells for $300 yesterday, and you put another one on the market, and there's 2 or 3 buyers. We had to take our laptop and our computer with us, because we'd show a house the first day it's on, and I'd type the offer at their kitchen table, and we'd present it as fast as we could, because we didn't want anybody else to see the house. And even still, we wouldn't always get the house, because there'd be so many offers on a property. So that's kind of where it went. And then it's kind of been a good market for really the last 15 years. It's been what we would consider a sellers to balanced market, kind of tipping back and forth between sellers and a balanced market, which is atypical of Ottawa being a very, very stable government town. Canada's ranked, in the top 3 countries in the world to live in. And Ottawa's ranked several years in a row the number 1 city in Canada to live in. And what we're seeing right now is immigration is starting to come to Ottawa. It was going to Montreal, was going to Toronto, was going to Vancouver quite a lot. But now more of it's starting to come to Ottawa. And it's going to put more upward pressure on homes eventually. The other thing I love the government's doing, they're getting very wise, because sometimes when you have immigrants come in, they would have a requirement on financial status or educational status. But the problem is we bring someone immigrating in who has a doctorate degree in medicine, and it doesn't transfer to our Canadian system. So then they're doing something else in Canada rather than supporting our medical field. And what the government's doing now is they're going to the foreign students who are coming here to get our top quality education and learn English, which is awesome, because they charge foreign students a lot more than they charge local students. And that helps bolster our economy, brings in foreign funds, and it bolsters the universities. Now, as soon as they're ready to graduate, they get a nice letter from the Canadian government saying, hey, you know what? If you'd like to emigrate to Canada, we'd love to have you. And so now we've got highly educated, English-speaking immigrants who have already been here for many years and are educated here.
And they're ready to move into
and they're ready to move into the job market, support our economy, buy houses, and all that sort of thing. So the government's doing some good things there.
And
I don't want to talk about the bad things the government's doing.
We won't hit on that. So when we talk about, the last 10 years, you said the market's been pretty stable.
Yes.
And moving forward, we have a lot of
Actually, it's been a little more than stable.
Okay.
See, if you look at the average curve, that 5.5, 5.6%, not the last year, but the previous years, we've been hovering around 7% for 3 years. So we're up above that curve. And so this is just a correction to bring us back to that, roughly 5.5% average. So I expect the market to be flat for, a year or two.
Okay.
Yeah.
Awesome. And then we haven't mentioned it yet. We also have a buyer's seminar on
we do.
third Thursday of every month.
Yes. So if you've never bought a home, or it's been a long time since you bought a home, or you're thinking, hey, you know what? I live in a freehold. I'd like to move into a condo. I want a change in lifestyle. I want to move downtown, or I want to move into one of these nice new apartments and get a good deal on them because there's so many out there. Then this would be the session for you. It's a place to come, ask your questions, get your answers.
We have a mortgage broker and a lawyer on site. And part of the presentation, and you can meet them and get an understanding of what those processes are like and how to move forward. It's
cool.
It's fantastic.
So if I could get pre-qualified to buy a house
Absolutely.
right there on the spot?
Yeah, you sure can.
And I meet my lawyer and I can ask him questions about closing costs and all that kind of stuff?
How the process works.
Wow,
Yeah.
and then I can ask the realtor about the market in different areas, and I can maybe even sign up and get a search sent to me of properties that meet my criteria?
Absolutely.
Wow, that would be really worthwhile to go to.
We think so.
Okay, so if you want to go to that home buyers workshop, the phone number to call is 613-860-4663. So many numbers in my head today.
613-860-4663.
That's great. And we just want to say thank you for listening to the Inside Track on real estate. We've had a lot of fun.
We have.
We hope you have too. And we'll see you next Friday.